Okay, Jack, this video is just for you. I'm answering your question about whether this is a good swing trade on Momo. The short answer is no. I would not get involved in or get into a swing trade on Momo at this point. If you look at this daily trend, so when I started legging in, that was back before COVID. So we were somewhere up here. I was definitely not expecting all of this downward movement here. And you can just see, I mean, this, the trend on Momo right now is just bearish, right? So hopefully down here, for me anyway, we are hopefully down here, we are hitting the bottom. But I would not be looking at getting into a day trade. I'm sorry, a swing trade on Momo at this point. It's below all the moving averages, both on the daily chart, and these are the ones for the weekly. It's just, it's too far. It's beaten down. It needs to find a bottom and bounce and start getting above some of those averages. However, I will show you, if you were to take a day trade on this, and again, I'm not recommending you do because I don't think it's in a great spot. I could be wrong, but when you do look at an inverted head and shoulders pattern, what you do want to look for, and this is what I'm going to address for you here, is if you were to take a look at this pattern and go, okay, it's let's say price action were above the moving averages and it was a worthwhile setup. What you would be looking at, there's two ways, a couple different ways you can trade the head and shoulders. So first of all, inverted head and shoulders. This is your left shoulder. This is the head. This is the right shoulder. The standard way of trading a head and shoulders pattern is to wait for it to get above these areas here. Okay, so you've got your shoulder, head. You're looking for it to get back above these two pivot points, this one right here and this one right here. And those are the pivot points that form the head and shoulders. So one way is to, conservative way is to wait for a break above this area, stop down here. Now that's one approach, but of course now you're getting in pretty late. The other one, which is definitely a more aggressive, let me remove this. The other one, which is more aggressive, is to do you basically take a break above on this is again the daily chart. You would have to wait for this candle to close and to see if this definitely ends up forming the right shoulder. But you would do take the trade above the right shoulder here with a stop, so maybe somewhere down here. So that's a more aggressive. You're getting in early. You're not waiting for it to get up here. Then you could also do a hybrid approach where you take, let's say you take a small position here. Let's say you do half an hour here and with your stop here, and then you wait for this break here, and that's where you do your second half. So that way you're minimizing your risk on the trade. You're not putting a full R at risk down here on this aggressive entry. Do a half R here, wait for it to trade above this level, and then enter your other half of the position here. And then your average, if you enter here and here, your average cost is, of course, somewhere in this area here, right? Somewhere between the two. And again, I would do, if you do a half R, you're doing the same amount of shares here and here. So your average cost is going to be in the middle between these 2 points. Anyway, hope that's helpful. Figured it would be easier to explain this in a video versus trying to type this all out in Slack, and hope you enjoyed the video.